Hi, this is Yahoo. I'm a option trader. It's 8 a.m. Japan time, July 30, 2025. Let's take a look at today's market. Japan's market recap. Yesterday, the Nikkei closed at 40675 yen, marking the third consecutive day of decline. It's down about 2.6% over the past 3 days. And this morning, figures are down. Overnight, we saw price reach around 40900 yen, but they were sold off again and now hovering around 40710 yen. One notable point was the number of advancing stocks, only 132 which feels like a sign of growing weakness in the Japanese market. Meanwhile, Japan's 30-year government bond yield has dropped from around 3.1% to 3.03%. It had been climbing steadily, but now it's showing signs of retreat. Political risk in Japan. This week's key domestic event is the Jiminto Joint Plenary Session. Um, there's speculation around the Prime Minister Ishiba possibility stepping down. Historically, these sessions seem more risk events than source of optimism. Zooming out, we are likely witnessing a serious challenge to Japan's post-war political structure, what we call the 1955 system. There's even talk of the Geminto splitting, which could lead to increased political instability and market volatility. Monetary policy direction and BOJ Nichi monetary policy meeting is scheduled for today or tomorrow. The general market consensus is that no rate hike will happen this time, but K. Dunham, Mr. Ninami, Sundry CEO, is publicly calling for immediate action. Pressure is clearly mounting Governor Ueda, and the chance of a policy shift is starting to increase. External events and the climate risk. On top of that, the FOMC is also happening this week, so we have several overlapping risk events. Water shortage and drought are finally making headlines in Japan. Some reports say bottled water is sold out in certain areas. And the dam reservoir levels, which usually shades around 17%, have all reportedly dropped to 0% in some cases. Two typhoons are expected to hit soon, which could help, but overall, this year's drought is global. Water is a resource tied directly to human survival, and structural instability here deserves our full attention. U.S. market recap: the S&P closed at 6371, down 0.3%. This was the fast decline in 8 trading days. While the move was not huge, in context, it was significant. The PIX is at 15.98, still low, but approaching the levels we saw before the December sell-off. We are now watching to see if it breaks higher. The MOVE index, which tracks bond market volatility, remains low at 85.07. For now, the bond market is signaling calm. Structuring inside the quiet shift toward the state capital, it is in both Japan and the US have been drifting lower. To me, this could be an early sign that states are beginning to decline in capital from corporations. That might mean higher tariffs, increased corporate tax, and tight regulations, all mechanisms through which governments recover dollar flow at the expense of corporate profits. If that's true, we may be entering a phase where bonds are structurally favored over equities. As assets gold is at 3328, Bitcoin is moving sideways around $117,000. No major shift in either asset at the point. Closing out on both Japan and the US are facing dense calendar this week. Um, Political and monetary events are stacked. We might not get clear market direction until these risk events are behind us. In the meantime, stay alert. My premium video report, including overnight data, as be update on node.com. Please check it out if you haven't yet. That's it for today. If you enjoy this content, following along with a long but mindset, I talk to you tomorrow.